Good afternoon everyone, this is Abid Khan and you are watching Karachians Academy YouTube channel. We are doing CIE past papers, accounting past papers of A level, paper 9706, paper 3, version 2, and we have selected May-June attempt 2022. In last video we were doing question number 4 and we did question 4 part A and B. So now we will do question 4 part C. Let's move on. Question for part A and B, we done with this. With this, prepare a journal entries in limited books to record the acquisition of the partnership. So limited book, we simply have to record how this acquisition will be recorded. That's all we have to do. So let's move on and we can solve this here. We can solve C here, a very simple one. And one point, there was vehicle of 57,000 of the vehicle, 18,000 vehicle was taken over by, let me have the calculator, 57 vehicle was 57,000 and 18,000 took over by Allen, and there was 39,000 of the vehicle. This 39,000 vehicle was taken over by the Limited, and when they were buying, Limited acquired partnership, just one minute. So the company acquired all assets except the bank account and a motor vehicle, one motor vehicle. There are number of motor vehicles. One motor vehicle was they did not acquired, and this was taken over by Allen. But rest 39,000 was taken over by the business, and they assigned value to 39,000 vehicle only 30,000, right? So now we already in last discussion we already worked this out, that 730,000 of the assets they are buying and they are paying 770,000, 40,000 they are paying more, and this is basically the goodwill they are paying to partnership business, right? So how this will be recorded in books, books, the journal entry you will be making will be goodwill 40,000, land and building 410,000, equipment 132,000, motor vehicle 30,000, inventory 70,000. They all assets will be recorded in the book as, and trade receivables 88,000. This will be debit, and they will issue, as we discussed, they have issued 770,000. This working we already have done. They have issued 550,000 share and then premium. Okay, share value was 1.4, 550,000. Purchase consideration is 770,000. So they are paying the rate 1.4 share. So number of shares are you just simply divide 770,000 divided by 1.4. Number of shares are 550,000. 550,000 number of shares, and rupee 1 is rupee 1 rupee 1 is face value of the share, and zero point 0.4 or 40 cents, this is premium. So ordinary share capital is 1 into 550,000 shares equals 550,000, and share premium 0.4 into 550,000. 550,000 into 0.4, 220,000. So they will issue 550,000 shares and record it as ordinary share capital 550,000 and 220,000 share premium. So acquisition of the business, acquisition of the assets will appear in MM books as this will be the journal entry. So we have done with C. Now move on to D. So we have done with C. Define the term intangible assets. And intangible assets, two numbers, marks of the question is a good. Intangible assets, those of non-current assets which you cannot touch them and which are not visible, but they do exist and business gets benefit from them, like goodwill and reputation and name of the business, and like its patents and rights and all these things. So they are intangible assets. So and in CE, discuss the reason why the purchase consideration was more than 70,000. Purchase consideration was more than 70,000 just because MM Limited realized that the partnership business has a very good standing in the business. They have a good customer base, they have a good supplier base, they have excellent employees, their customers are very loyal customers, and these were the some benefits which MM Limited expect to get from this business, because MM Limited does not need to train the staff. They do not have to explore more customers. They do not have to explore more suppliers. There are very strong supplier base, customer base, and employee base. So that is why they are paying more, because they will do not a greater effort and they will be reaping the benefit of partnership business effort, right? Advise the director whether or not they should have paid more 70,000, 730,000 for the partnership. Justify your answer. So we can move on to we can see these in marking scheme, and we can discuss this. In marking scheme, just see it was question C. Question 4 A, B, D. D, intangible asset is a identifiable non-monetary asset without physical substance. This is what I explained you. And number one, E, MM Limited pays 40,000 above the total value of the tangible assets acquired as a as a purchase goodwill is the excess of the consideration over the fair value of the net assets. This I explained you. Will bring future economic benefit to Limited. Yes, this will bring more sales, more profit into the business. Goodwill is created over time through good reputation because of the high quality product, location, good relationship with customers, loyal customers, and team of the competent and efficient staff. This is what I have explained you. So this is your answer for E. And F, F, the company will receive future benefit in excess of the 40,000. This is very much clear. The business is only paying 40,000, but as I explained you, business will do no more more efforts. It does not have to strive for getting more customers. So the business will have a settled customer base. It has a very good market. It has a settled and strong supplier base. It has the company has not will not be searching for more supplier because good suppliers are there, good trained staff is there, and this all will result. This will generate a lot of benefit to the economic benefit to the business, right? So guys, we have done with question 4 complete. So in our next video we will do question number 5. And if you have any question, doubt or clarification, you can write on the comments, and we will try to respond to you and get back to you very quickly. And we hope this video will be helpful to you in your next week exams. Thank you very much, and bye for now.